So would you introduce yourselves for the record?
I am Ajit Abesekara, Deputy Secretary to the Treasury.
A.K. Senaranda, Deputy Secretary Treasury.
I am Nandalal Virsing, Governor, Central Bank.
I am Mahinda Sirvajan, Secretary to Treasury.
I am Kapila Senanaka, Director General, Department of Fiscal Policy.
DG National Budget, Jude Nilukshan, DG National Budget.
Deshal Dimel, Economic Advisor, Ministry of Finance.
Chandranath Tamarasekaran, Assistant Governor of the Central Bank.
I'm Rukshada Jayathilaka, Director of Bank Supervision, Central Bank.
I'm Sujita Jagajeevan, Director of Economic Research, Central Bank of Sri Lanka.
I am Tushar Rodrigo, Additional Director General, Public Enterprises.
I am Damita Ratnayaka, Additional DG, Treasury Operations.
I am Samantha Bandara, DG External Resources Department.
I am Shiranti Ratnayaka, DG National Planning.
I am Subanayapa, Additional Director General, National Planning Department.
I am Ruzni Abdin, Director Public Enterprises Department.
I am Jaini Vikramarachi, Director Department of Fiscal Policy.
I am Nilosha Besekara, Deputy Director Department of Fiscal Policy.
Yes, so what we'll do is then we'll collapse both. We'll collapse the FMRA report into the presentation the central bank is doing if the members are okay. Yes, please.
So first of all, thank you and Happy New Year to everyone, especially the officials and also the Parliament members. So I think the fact that Sri Lanka is where Sri Lanka is because we didn't do this, what you said, we didn't have structures, neither we used the structures we had to ensure that Sri Lanka goes in a particular direction. And the problems that we had to solve was out due to correct those situations. I think as you correctly said, now we are in a better position because of the decisions we took. But decisions always, when we take a decision, there is one side for positivity, another side for negativity. So I think what we need to now collectively correct those impacts that made through those previous decisions as well. So while the macroeconomy stabilized and got us into the today's position, with those decisions there were parties which got severely impacted as well. So I think when we go forward, it's very important that we do acknowledge the parties with at disadvantage during this process of recovery. And I think the hardships will continue for certain starters of the community and the business. So I think it's up to us to recognize that and also to look at possible solutions. So Chair, I also want to understand who's our customer. Is our customer the government or is our customer the public? I think it's very clear. What I'm understanding is our customer is government. We are here to kind of provide insights, inputs to the legislature that is coming through. So my question is, can we be a step further as well? Now, if we are to evaluate the legislature that comes here, that process also comes to officials being involved, decisions being made, lot of scrutiny, lot of analysis. So for a bill to come to Parliament, it would have taken another 3 to 4 months within the ministry, also talking with the central bank in conjunction that bill is coming here. So is it too late? Or rather, can this committee also take up few prominent issues in the economy? And since we will have a analytics team or a research team, can we also look at it a little early as well, so that when something comes here, we also have a view, rather we try to study it at that point. That is something that I wanted to understand. And I think the other piece is, yes, we are here to look at the policies and the bills that comes through, but do we all understand the new government's economic policy? Because that also need to be read in a different way, because after 30-40 years there's a different political angle that new government is looking at the economy. So I think it's also important that we understand the principles and the assumptions of the policy that was put forward for the public, because there's a mandate given, and that mandate also has particular assumptions and particular economic models. So I think that's also important that as a committee we understand where the new government is coming from, so that it will be easy for us to read the new legislation and also be pragmatic about it.
Yeah, Honorable Minister, 2 points. On the customer, I think it's beyond, I mean, I want to broaden it to Parliament, which means government and opposition both. So this is a parliamentary committee. So therefore, our customer, I would think, would be the MP, immaterial of whether in government or in opposition. So that is why, Honorable Minister, we need, I mean, you have a data analytics background, and you know, that kind of thing would be helpful. And you know, in the sense that, you know, we are data driven, you know, evidence based policy making is where we need to go to. So just because the Secretary Treasury presents to us a piece of or amendment to some legislation saying, you know, I'm going to, now let's take the matter of what is this, withholding tax, right? We are going to increase withholding tax from 5 to 10%. The government will have its position. This is what we are going to do. This is what the end result is going to be. The Honorable Minister will be, you know, sort of advised by the officials here. But then what is Parliament's view on that? We are not government. You know, this is a Parliament, right? So there we have to be able to look at, like you said, the positives and the negatives, right? What happens? Yes, cash flow will improve, but what about, like you said, certain people who may be disadvantaged by it? What are the technical decisions you have taken, you know, to ensure that doesn't happen, and so on. So that is why that, and I'm directing this to you, Honorable Minister, also, that, you know, we need to urgently set up the Parliamentary Budget Office. Right? Everything is it's in progress, but we need to you know, expedite it so that we have the technical support from behind to have a meaningful, logical debate. The other point is your policy. Now that is the second report that, Honorable Minister, I mentioned a little while ago. That is, when you present the budget, as the minister will propose the budget, no. So in the second report that we need to present to Parliament, that is not the assumptions, but based on government policy, has money being allocated. So there we will need to know, this committee will need to know what exactly is the policy, right? So you will have to say, this is our policy, you know, this is what we are going to do, right? So based on that only, we will, this committee will present that report with the support of the Institute of Policy Studies. We'll have a bunch of economists working on that for us.
Very good morning once again, Honorable Chairman and everyone. Very best wishes for a new year. Just wanted to reiterate that several government officials are being invited on a regular basis, as the Honorable Member mentioned also. And perhaps if the details are coming into this committee comprehensively, that has already looked into the pluses, minuses, impact on several other areas, it makes it much easier for us to make a decision, because all the resources and the details are made available to us. There's so much of competency within the institutions to do the work, and they have spent a lot of time in preparing these proposals as well. But perhaps one reason sometimes the challenges are, when officials are called, so many of them are seated here for several days, for several committees, etc. So those could be among the reasons why sometimes the type of information that should be contained in the submissions to these committees may be less. Otherwise, one way is to duplicate the resources that we need, or make the best use of the resources that we have also. So unless we really need them to be present here, because this is not going to be an engagement to create media hype, but to look at the substance, as the Honorable Chairman mentioned already. So if we can make our the planning for future in such a way, that we release senior government officials for them to work with their respective team members, and only when it is absolutely necessary we call them for discussions, for clarifications, etc. But we can give them guidelines as to what needs to be submitted, so it will take a transition a little while also for them to get used to, and for us to get used to also what is to be submitted to us, etc. A suggestion for consideration. So we can allow them to come up with more comprehensive details, all the information that we require. And I'm sure many government departments are getting stuck with the waiting signatures. So that's why we can see at the last moment several things are coming for signatures. So sometimes even the senior officials themselves don't have the required time to review them. Why most of the time they are called upon for engagements of this nature. So we'll look at I'm sure Honorable Minister, while you were holding the positions, you would have noted these challenges. That's why you very correctly suggested, which we already see within the short period time also. So going forward, we'll suggest with your input, we'll identify a mechanism to address that as well. Thank you.
Honorable Minister, now with my experience in this Parliament for the last 14 years, is that last Parliament we had this problem occur in a big way, and that is because we created 97 committees. How many committees? 88 committees. This Parliament does not need 88 committees. Right? For public finance, one committee is necessary, and that is this committee. You don't need like 4 committees for public finance. Right? So the issue, Honorable Minister, Parliament has to have the freedom to question officials. This committee must have that freedom to do so, right? And it shouldn't be a one-way street, right? So therefore, in fact, we have sent where is this? Right. So multiple directives, and I'm reading the last one as of 3rd February 2025 for today's one, right? Sorry, 3rd January 2025. You are kindly informed the presence of the Secretary, Deputy Secretary is essential at the meeting along with heads of relevant departments. Only other essential senior staff, one from each department. That is what we have said today, right? But we have, now this is a special meeting today. That is why the heads of the institutions are here, right? But otherwise, we conduct these meetings, but we will not hold a meeting unless a DST is present, right? Because this is an important matter, right? DST has to be there, and then we have said no more than 3 officials, right? So if we resolve the problem with too many committees, Honorable Minister, this committee should have the freedom of to exchange views. So we have already said 3, and we'll continue with that. And I totally 100% agree with you, because they'll be called to this committee in the morning, some other committee in the afternoon, 3rd committee next day. So they're always here. So that is what we need to resolve.
I think I would like to add to what Dr. Harsha Silva said. Being a member of Parliament in the previous Parliament as well, it's precisely what Dr. Harsha Silva said about the number of committees. I think that's why the officials were, always at Parliament. I don't think I wasn't part of COPF, but I was part of COPE. But I think this committee, the relevant officials attending should be seen as a priority, because this is the Committee on Public Finance. That's a form, it's in the standing orders as well. So the sectoral oversight committees that we had now this government, we don't even know if you all are going to have the sectoral oversight committees. So I don't think there'll be an issue for the officials to come to many such committees, because the central bank officials and the treasury officials aren't really summoned to COPA or COPA unless COPA, if the finance ministry is summoned. So I think this committee, if the chair decides that some officials are needed for the meeting, I think that must be entertained, and also the chair and the committee members also must be, as long as the chair and the committee is sensitive to the fact that officials have other tasks as well. But I think one suggestion that the Honourable Minister put forward, where getting the comprehensive information prior also, I think because it's the first week we have so many bills that are going to come up all of a sudden in 1 week, but going forward, if the government can also have a plan to tell us we will present these bills in 3 months, this bill will come, then obviously the committee can also do that. But if the government is going to urgently push through a bill, then the committee will have to urgently summon the officials. That will be, I don't think we can compromise on the independence of this committee. So we can't rely just on the information provided by the officials. But I have a serious concern about the resources that we have to now technically evaluate this. I mean, even though in our personal capacities we may have some knowledge or expertise in the finance field, but specific bills, I think there's a serious concern about finding the expertise. So unless the chair and the parliament can address that, I think we'll all have to depend on our expertise to analyze this. So I think we'll be sensitive to the officials. Obviously, the central bank governor or the secretary treasury, I don't think we would need to summon. You'd need to summon all the time. But relevant officials, if we give adequate time, and also if there are no other committees that are going to duplicate the work of this committee. I remember last time there was one called Economic Stabilization Committee. Then there was another one about different names, the same thing that's being duplicated. So as long as that doesn't happen, I think this will be the only committee. But I think the Honourable Chair had put forward a request to the Business Committee also about another committee overlapping the work of this committee. So I think if all the members from the government side who are present here can put forward that through your party leaders also to consider that as finance committee members, that you understand the importance of officials not having to come twice to parliament for the same task, then if you also agree, as a committee we can endorse the chair's request to not have another committee overlapping this committee's function. Otherwise, that committee and this committee will now compete and overlap the functions of this committee, so the officials will have to come. So if the government members can also endorse that, say that you had the committee and this was a problem, that you endorse the request of the chair, that will be useful.
Now, how many committees are there now in this parliament,
No, so far only this committee has been established. The COP and COPA will get established, I guess, this week or soon.
Yeah.
And I don't know about the sectoral oversight.
Oversight committees are not nothing at the moment.
No, it has been suspended.
Right.
Yeah.
What is that committee that you have suggested that it's overlapping?
Committee on Ways and Means.
Yeah, see, I mean, we don't need ways and means, we don't need banking and finance, we don't need economic stabilization, we don't need, none of those are necessary.
But doctor, the economic stabilization, all that are SOCs. Ways and means are part of the, it's a standing order committee.
Yeah.
That's the thing.
So that needs to be, so we need to sort of take this up, and because it was introduced last parliament, right? So 2022. So there are many committees were put in at that time to deal with the situation, but now we have to streamline this.
Yes.
Yeah. So standing orders will have to be amended.
Honorable Chairperson, I have a small clarification to make. Now you highlighted the urgency of setting up a parliamentary budget office. May I know, I mean, we understand that there is a human resource gap there, but correct me if I'm wrong, was it the IPS supported in that role in the previous parliament, or are you suggesting a development partner to come and take that role up?
No, Honourable Member, the Parliament Budget Office is like, for instance, Congressional Budget Office in the US, the Parliament Budget Office is in India, Budget Office of Parliament in Australia. All these well-governed countries, they have their own independent office with technical expertise, non-partisan technical expertise, which we don't have. So we started to set up that office in the last parliament, and the legislation was approved last parliament. So now it is in the process of being, staff is in the process of being hired. So we are trying to, the Secretary General is in charge with the Deputy Speaker, myself, and used to be the Chairman of Ways and Means, to propose some names to the Constitutional Council. Once that happens, they will set up this office.
I see. Okay, just
yeah.
to
So
clarify.
IPS was helping us as an interim measure because we don't have this office.
Right.
I mean, on a personal note, honestly, I not that I wanted to mention this, but since you asked, sometimes I'm up till 2-3 o'clock in the morning because there's so many pieces of legislation that come. And Honorable Minister, I'm telling you, and the Secretary Treasury, don't send us like 5 things the day before. Right? This time we have 14 or something. That's okay because we are just getting started. But from your side, please try to understand that you send a bunch of things to this committee. It takes us also some amount of time to study this, and so if you give us adequate time, I think everybody will be less stressed out.
So for the moment, we don't have such support structure. Is
No,
it?
madam.
Yeah. Okay. Right.
Yeah.
Just to clarify.
Yeah.
Thank you.
Some of the matters, Honorable Chairman, that are getting referred to us is to correct the policy decisions that were taken in the past. Some could be due to procedural requirements. Sometimes majority of them I can see this time, even though it is in terms of bulk procedural requirements per se, and some will be futuristic in terms of new policies. So as we go on, I'm sure we have a lot of competency around here, and we should be able to figure out the best way forward so we minimize disturbance to the operations out there and maximize the use of resources that we already have. For example, IPS, as you suggested, also get their contribution well in advance, collaborate among each other, so we'll have a very productive outcome at the end of the day. Thank you.
Thanks. Shall we get going then? If there are no other questions, please.
So, Honorable Chairman, do you want to make the presentation or the mid-year budget? What is the sequence?
It's up to you. Really, we have official business of approving the FMRA's mid-year. Right? Mid-year is gone, no?
Yeah, mid-year is gone.
Yeah. So why don't we do that while we make the presentation? If the members are okay with that.
Yeah. So I think then I will invite Director of Research to briefly take about 20 minutes to complete the presentation, and then we can have a discussion, and also Treasury can also bring in on the fiscal side as well. Thank you. Dr. Sujita Jagajeevan, Director of Economic Research, Central Bank.
Good morning to honorable members. We have put out the presentation based on the request from the Public Finance Committee. The outline of the presentation will be on current state of the economy, macroeconomic outlook, an update on debt restructuring process, and engagement with the IMF, and recent legal enactments. Let me start with the current economic status. So we have summarized the key macroeconomic indicators here, starting from 2000s for most of the variables, to see what has happened in the recent times. Starting with inflation, as everyone knew, the country recorded a historical inflation of around 70% in 2022. Since then, we have seen an impressive disinflation path, and inflation is currently staying around the negative levels of 2.1%. And on the growth path, starting from mid of 2023, there has been a recovery in growth, and we have been seeing 5 consecutive quarters of growth. And during this year, first 3 quarters, the economy has recorded 5.2% growth. And exchange rate also, after being allowed to adjust to the fundamentals, it depreciated sharply in 2022. Since then, we observed that exchange rate appreciated both in 2023 and 2024. On the current account, the country has recorded the current account surplus for the first time after opening up the economy in 2023, and the current indicators suggest that this year also we will be recording a current account surplus. Partly this could be attributable to some of the import restrictions that has been in place, but still we have seen some of the indicators are suggesting some recovery in external current account. And gross official reserves also has improved from a very lower level recorded in 2022, a gradual build-up of reserves, mainly through the purchases of foreign exchange by the central bank from the domestic forex market. And also with the support of fiscal consolidation measures taken by the government, we have seen a notable progress in the fiscal performance, with budget deficit as well as primary balance improving during 2023 and 2024. And with the dissipation of disinflation process, central bank managed to start the easing cycle of monetary policy that has been passed through to major market interest rates, and we see a notable decline in market interest rate, bank interest rate, both deposit and lending interest rate, as well as the government securities yield. And the money supply also, with the easing monetary conditions and reduced market interest rate, we could see credit to private sector expanding mainly from May this year, May 2024. Let me briefly explain about the inflation development. As I already explained, we have seen an impressive disinflation path. And at the beginning of the year, we have seen an uptick in inflation that was mainly attributable to the increase in VAT rate as well as removal of exemption on VAT on several products. With that, we have seen inflation hovering around 6 to 7%. However, there were two notable adjustments to electricity tariff, one in March and July. And also globally also we have seen energy prices slightly going down, and that was also passed through to domestic prices. And there was some favorable development on the supply side, with food inflation also coming down. All these have led to inflation declining since then, and currently we have deflation. And the current inflation, current information suggests that this will continue in the next quarter as well, the current quarter as well. And from mid of this year, we will see inflation turning to positive level and move towards the targeted level of 5%. And on the growth side, as I already explained, we had a positive growth for 5 consecutive quarters. And during the first 9 months, the economy has grown by 5.2%. The current indicators also suggest that growth momentum will continue, supported by low interest rate, recovery in tourism and its spillover on other sectors, and improved supply conditions and positive investor sentiment and the structural reforms. And with regard to the central bank's monetary policy, we have seen the policy easing continuing from which started from mid of 2023, and this year also we have reduced policy interest rate 3 times with a total of 125 basis points. And an important move happened during this year is moving to a single policy interest rate from November onwards, from a dual policy interest rate that prevailed for several years. And we have announced the overnight policy interest rate as the key policy interest rate of the central bank, that has been fixed at 8% with approximately 50 basis points reduction that was effected in November. The purpose of this is to maintain the operational target of flexible inflation targeting, which is the average weighted call money rate, around this overnight policy interest rate. And the previous policy interest rate SDFR and SLFR will remain for operational purposes, and that will be linked to the OPR with a predetermined margin.
Just a quick one. Is the margin decided? How is the margin decided?
currently it has been decided at 50 basis points from OPR plus and minus.
So is it, I mean, for
it's a monetary policy decision.
No, I know. Why is it for a particular period? What is the duration of that determination?
So this will continue until the monetary policy board decides to revisit the margin. And the reflection of eased monetary policy stance of the central bank has been reflected in other market interest rates also. You can see from end of 2022, there has been a notable reduction in many market interest rates. So this reduction not only reflects the monetary policy easing by the central bank, that also reflects the dissipation of risk associated with the government securities yield, with improved fiscal performance and improvement to debt restructuring process and all. So we saw larger reduction was recorded in the government securities yield, and that also was helpful in reducing other market lending and deposit rates. And as I already explained, with these eased monetary conditions, we saw private sector credit from the banking sector improved continuously, and so far this has recorded around 9.2% growth. And more importantly, the net foreign asset of the banking system turned to positive level this year, and particularly the net foreign asset of the central bank has improved and turned to positive level from October. This was after 2.5 years of being in negative levels. That was supported by the build-up of reserves and also settling of some liabilities of the central bank.
Level now?
As of November, it was 6.5, and by the end of the year, we expect that to be around 6.1 billion.
In terms of months?
4 plus. 4 plus, that includes PBOC as well.
That means so the PBOC can be utilized now?
That has been renewed now.
But it needed 3 months of cover, right?
No, I think that's there is a certain condition, but we have to discuss with the PBOC and get their permission to draw down and utilize only for purposes of importing from China. That's understanding, but they have not given us the permission yet to utilize, draw down. Still, that is kept as a deposit with PBOC. 1.4 billion worth of US.
And banking sector also, there has been notable improvement in several aspects of banking sector. Asset, loans, deposits and investments have grown during this year, and also a notable profit also has been recorded. And the credit risk has reduced from the peak level of 12.9% recorded in March 2024. Currently it's at 12.4%, and liquidity coverage and capital adequacy also has been continuously improving. And on the external current account, a surplus is expected this year as well, which was mainly supported by the revival of tourism earnings, as well as several other services sector recording some improved performance. And also workers' remittances has been notable improvement has been observed in the workers' remittances as well. So we have this tourist arrival. So the country managed to get around more than 2 million tourists for this year, and it's estimated around 2.8 billion of tourism earnings up to 11 months. And up to November, the remittances have been recorded by around 6 billion, and we expect to end the year with around 6.5 to 6.6 billion of workers' remittances. And gross official reserves continuously improved. It was 6.5 billion by the end of November, even after settlement of several outflows that was associated with the ISP related exchange. Still, the gross official reserves is estimated to be around 6.1 billion by the end of the year. And the important point to note is the central bank has purchased over 2.8 billion of net forex from the market. This has been the historically highest purchases for the country. And so of the gross official reserves, even though 1.4 billion has been from PBOC, most of other components have been organic, not like mainly borrowed funds. It's built up funds. So it shows the healthy build up of gross official reserves.
I don't want to disturb you here, but at the question time, I mean, I think we need to take a look at it. No, I mean, if the central bank didn't buy that 2.8 billion, what the LKR would have been against the USD, and given the plan to open up the vehicle and other imports, you know, how much intervention the central bank is going to do in the coming years or coming year, given you saw the private credit numbers are also going up. Interest rates are down. The moment you open, then the pent-up demand for imports are going to be quite severe. So will there be a spike in the effects? These things, I think, Honorable Governor will speak after just a point to discuss. Yes, please.
So these improved inflows, net inflows, has reflected in the exchange rate movements as well. The currency has appreciated by 10.7% in 2024. That following a 12.1% appreciation recorded in 2023. And on the fiscal side, we have data up to October. There has been a notable performance. All fiscal balances have improved. Primary surplus of 831 billion has been recorded during the first 10 months. And government revenue has increased by 35.6%. And there has been some increase in government expenditures as well, comparatively a lower increase of 8.7%. On the macroeconomic outlook, the headline inflation we expect to continue in the negative levels during first quarter of this year. But since then, we expect that to move towards a positive level. Under the Central Bank Act, there is a requirement for the Central Bank and the government to agree on the target. So, Monetary Policy Framework Agreement was signed in October. According to the agreement, the target was set at 5% with a margin of 2% plus and minus. So, with this, if the inflation is below 3% or above 7% for 2 consecutive quarters, then that is defined as a target miss. So according to this definition, so we have missed the target in the second quarter of this year as well as the third quarter. So there has been an official target miss. So we have submitted a report to the minister to be submitted to the parliament. That was approved by the cabinet. We expect that to be submitted to the parliament hopefully this month.
On question time, another point that I want to is 5% the right number given, you know, the context today? So that's the second question. Yeah, you can pose a question to answer at the discussion.
So you would give the reasons as to why the target has been missed for 2 consecutive quarters?
So we have so in this report we are supposed to explain include 3 aspects. One is the reason for the target miss, and the measures taken by the central bank, and the time within which the inflation will come back to the targeted level. So the major reason for this target miss is, as I already explained, that's mainly coming from the supply side factors associated with the electricity tariff adjustment, because electricity tariff adjustment has some major weight in the basket. And with that, there has been some second round effects as well, and also several other energy related products like petrol and diesel prices have been continuously adjusted by a smaller margin, but that also has contributed. And also with some improvement in food supply, we have seen the food inflation also has been coming down. So all these together have contributed
to
this.
So food is cost push, or what is it? Import content, or what is it?
Partly import content with the strong currency.
So in your, is it a question in time? Or
no, not there.
Okay.
Yeah, just pose the question. Okay. We'll answer during.
And one other thing, these reports that have been sent to us, why is it not in color? I mean, this is an absolute cost reduction exercise. We can't get anything out of this. Who has done this? So I suggest that we get the official thing that is there. Because when you're comparing, the color bars that are there don't reflect what we want to get it out. So let's not steal on
I think it's shared in the WhatsApp message.
No, we are not being shared.
You may have got it because you're the minister. We will set it up. Set up the group.
Yeah, but why is that?
No, set up. No, set up the. No, you must have got it from the central bank. What we are going to do is, I told you we'll set up the WhatsApp group today after the meeting.
Chairman, I think she's trying to say something.
Sorry. You created the mem now?
Individually she has shared.
She has individually shared. So, Honorable Member, you would have got.
It's available.
Because I was wanting the concurrence of the committee to set up the WhatsApp group. So, once the WhatsApp group is set up, she will share.
So in short, we'll get what she is going to show in advance.
Yes.
Right? Rather than we get
Yeah, we will get it in the. We will get it.
Chairman, I have one question. I don't know if are you done with the presentation?
No, a little bit more to go.
All right, sir.
So on the growth side, the economy is expected to grow by around 5% in 2024, and the current information suggests that there will be a minimum growth of 3% in 2025. But we see that the country has a higher potential to grow above 3%. So we'll be publishing our medium-term projection in the annual economic review when it's published in April. So we see that it's so the current momentum is good for the growth, but it's important that we continue with the structural reforms and to have the pro-growth policies to ensure that this recovery continues in growth, because we have a long way to catch up for the output losses that has happened during the crisis. The current status of the debt restructuring, on the official bilateral credit, there has been an agreement, MOU, with the official creditors for a total of 5.9 billion bilateral debt, and currently the government is progressing with signing bilateral agreements. And a bilateral agreement with China has been fully completed. And also for the and other creditors who are not part of OCC also agreeing to the same condition agreed with OCC, and the agreement with those countries are also currently being processed. And on the commercial creditors, the ISB exchange has been completed with 98% of the exchange happening in December. And the debt related to China Development Bank also has been completed for $3.3 billion. With the almost nearing the completion of external debt restructuring, you see two credit rating agencies have upgraded the country from the restricted default stage, Moody's and Fitch rating. And S&P is continuing the current rating, expecting the completion of debt related to Sri Lanka.
Now that is sufficient, Director, because next is engagement with IMF and the matter related to central bank. But what I would like now is, Secretary, if you can update us on the fiscal position report on the revenue, expenditure and expected budgetary situation. Then I think we can go into the discussion.
Yeah, Chair, before that I have to leave in about 10 minutes. Just on this presentation about tourist arrivals, about the arrivals of the tourists, I have no doubt, but about the projected or the received the estimates, how are they? Is it accurate? I mean, is it a overall formula that you used to use back in, or is it a new formula that you're using? Just a clarification to see if it's actually accurate. The projection is accurate.
This is actually an estimate based on tourist arrivals and
how much
estimate that comes from
day?
SLTDA about the duration of stay and the amount spent a day.
And
so
amount
all these
spent a day,
estimates
how
are
is
coming
that
from SLTDA.
Amount spent a day, how is that figure arrived at?
So it's based on surveys. We get these numbers from SLTDA, and based on that we calculate and estimate.
So it's just a set amount multiplied by the number of tourists arrived. Do you know what that amount per day is? Just out of curiosity.
183.
So you are assuming that each tourist spends $183 a day in the country. That's how on average.
So the 2.8 million that you reflected is assumption.
It's an assumption. It's an estimate.
On the basis of $183 a day.
Yeah. So currently we have a system called ITRS, International Transaction Reporting System. So there we get details about inflows and outflows in Forex. So of the total estimate of tourism earnings, we see around 40% is coming through the banking system. So that's more or less common, that maybe because tourists must be spending by currency also. So those are not captured
but
through the banking
so
system.
they are converting the currency at a...
Yeah, somewhere here, and they must be spending here. Those are not
60%
captured.
of it is spent like that is the assumption.
So we can see that around 40% is coming through the banking system. We have evidence to show that around 40% is coming through the banking system.
And
has it reduced or has it been same? Like
so it's a new system. So it's available on, we have made it available on enough. 2023 and 2024 data. Roughly around 40% is coming through the banking
so the survey that you say that has been done, how was that survey and when was it last done?
This is actually SLTDA. So earlier they usually do the survey and give us the estimate for the year as a whole. But now we see those estimates are revised on a monthly basis.
So what was the per earning day in 2018 when it reflected? 4.5 billion.
In 2018 it was $180.
173.
Yeah, there were small changes.
It was below that.
Because you had 4.5 billion earning.
That divided by 2.3.
2 billion. So it doesn't. There's something that is not tallying. 218 just prior to COVID, 220, I'm sorry, which had 4.5 billion if I'm not wrong. So 4.5 million had 2.1 million tourists.
I think to my knowledge that time our estimate for duration of stay has been higher.
It's based on the number of heads per room or something, no?
No,
there are three variables.
Three variables. Arrivals and duration of stay and
anyway,
per day spend.
Honorable Chairman, since this is not part of the discussion, I just wanted to clarify, but I would like to ask you to see if we can revisit now SLTDA giving a report. We need to see how competent SLTDA who is providing this, because now out of our forex earnings, the foreign remittances and tourism are playing that there are two major factors in the earnings. So we need to know if these earnings are accurate, because from my little knowledge and observations, I don't think the 183 per day seems accurate. That is based on my survey. So my survey is not something that we can base on a discussion for COPF. So I would like to urge you to look into this and ask for a report on who came up with this, who is doing this for SLTDA. Does SLTDA have the capacity to do such a survey? Are we being given correct information? Is something, if you can look into that, please.
Yeah, I think that's very important that we get the estimates right, because one of the biggest concerns in the tourism industry is that we have inbound tourism which is not part of the country. And also the bookings.com and the other two platforms, they again take another 30% out of the entire ecosystem. So we need to be able to estimate this particular value in accurate way so that we know we can make decisions better. Yeah,
it's for the government and for all of us. If it was a smaller component of our forex earnings, it's negligible.
Yeah, but
this is a big one.
This is the second biggest after the forex earnings.
This has been the case for quite a long period of time now, that I'm sure the officials are continuing on the same basis. But as you very correctly said, it's very important to validate that one and to understand the basis.
Otherwise we have to recommend to the tourism ministry to look at their policy differently, because it's not about the number of tourists who come.
Given the time, Dr. Kapila, will you be able to say? Yeah.
Sorry, one other thing I think adding on to Honorable Shakti, what we could basically get is, because this deficiency existed, I think Mr. Mahinda Sirivadu will know, these booking.coms, they only send the net amount in, no? So that's why I'm quite curious to know what was it then and what is it today, but it doesn't gel. So they're just coming and relating some information here won't help us. You'll have to get it backed up with information.
We will, Honourable Member, we will.
So you'll have to go into
that.
the booking.coms also, because they bring in 40 to 45% of the tourists that is coming in. So
can't you call for a meeting just on this later?
We can, but first of all, we will ask for a detailed explanation on how this matter is arrived at, how these numbers are arrived at, and then the committee can decide what to do with it thereafter.
When can you hear this week?
This week won't be possible. We will ask for maybe probably a couple of weeks.
I was wondering because you work till 2 a.m. maybe you may.
I can't do it myself. No?
As we discussed earlier as well, we'll get the information to be submitted to us for us to have a basic idea also, and if we're still finding there are challenges, etc., then we can call the officials.
Anyway, it's going to be estimated, so we just have to ensure how because tourism income you can't figure out.
No, it can come through the banks. That's why I wanted your reconciliation of 2.83. Is it reflected?
It doesn't come through banks.
No, certainly not.
It has to be estimated.
Yeah.
It has to be estimated.
Only 40% comes to the bank according to the director. Yeah. Okay, Dr. Kapila.
Yes,
mindful of the time, only the important points.
Yeah, of course, Honorable Chairman and Honorable Members. So this is actually the second time we are going to present mid-year position report, because earlier we published mid-year position report under the previous act, Fiscal Management Act. This is under the Fiscal Public Financial
This
Act,
procedural.
procedure actually. So we have already published this report by end October. So this for the now for the approval of Parliament for the already table. And the main thing I think Sujita has explained economy and other things. But if you can maybe just focus on the fiscal sector performance during the last 11 months, you can see the notable performance in tax revenue.
We can't see that.
By maybe next 8 slide. Yeah, that one. I think it's difficult to might be read. So tax revenue increased by 34%, mainly driven by taxes on goods and services, income tax, and also the external trade. And also we got more improvement in the non-tax revenue as well during the 11 months. Expenditure also has rationalized and also the curtail, mainly benefiting from reduction of interest expenditure. So you can see the recurrent expenditure has reduced by 0.4% during the 11 months. So capital expenditure has increased 21.4%. The execution rate is 48%. So that's the thing. And then the primary expenditure has recorded 927.8 billion during the last 11 months. This is a big improvement against the 250-year target. So budget balance also contained to 1,217 billion. So that's the nutshell of the fiscal sector development. So we have also.
So in terms of percentage, Dr. Kapila, this 596. Sorry, the 927 is how much?
Percentage is percentage change is.
No, not the change. We are supposed to keep 2.3. Is it?
Yeah.
And what is it coming to now?
Maybe. Yeah, next year 2.3. But this year would be, because we have to get December figure as well. So not yet we have received the December figure. So
What is it that you're asking?
No, this 928, honorable member, the primary balance
Zero.
is supposed to be 2.8 for 2025 or 2024?
2024.
What was it expected to be 2024?
0.8%.
0.8.
Yeah.
So
now
this is
it
much
will
more
be
than
more
that.
than, yeah. It's a huge improvement.
Huge improvement.
Yeah.
That is because your total recurrent fell from 5.2 annual estimate to 4.3 for the 11 months. So it will be your recurrent expenditure.
Yeah, because of
interest
reduction of interest expenditure.
But you anyway, that is because the treasury bill rates came down.
Yeah, that's the main yeah.
Because
reason
anyway
for that.
we were not paying interest on the other debt now.
Yeah.
Kapila, what is 1% of interest as to government expenditure? 1% interest increase,
Yeah.
what impact on your fiscal?
1% of increase mean balance means for the.
If 1% increases,
Yeah.
1% increases,
Yeah.
what is the impact on fiscal, on the
Well,
budget?
I mean,
on the budget?
Yeah, you'll have to think about what we have about $50 billion in.
That's what I'm asking. Last time we had 70 billion is 1%. How much is it now?
1% is about 300 million. 1% means.
No, we have about how much? $50 billion in domestic debt.
Yes, so I think.
50 billion, no, is it? In terms of domestic debt, there's how much?
53 billion.
Okay, let's say 50 billion.
Amount, yeah, that amount.
So 50 billion, 1% of 50 billion.
Yeah.
But if 1% of
is
interest
150
rates come down,
billion. Yeah.
You basic. So what is the rupee component? 1% is how much? Now VAT is roughly 7 billion on a particular 30 billion.
That's an interesting
Yeah.
question.
Like that's why I'm trying to ask what is the rate there.
So you got about 15 trillion in domestic debt.
Domestic debt, I don't have that figure.
What is your domestic debt?
As of December, it is 100 billion, 53 billion domestic.
Yeah, $53 billion.
And balances.
No?
Yeah, billion.
Yeah. Sorry? 18.3? Yeah, so No,
domestic.
So what did you say? 13.8 trillion? 18.3 trillion. So yeah, so that's why I said roughly 15 trillion. Yeah, roughly. Okay, I say 18 trillion. So 18 trillion, you look at the impact of 1%. How much is that? Yeah.
Apply 10% an average interest rate on 18 trillion. It's about 10%, 1.8 trillion. The interest bill at 10%. 1% means 1/10 of 1.8 trillion, 180 billion.
180 billion? Massive.
1%.
So 1% increase is 183 billion.
180 billion.
So
Something around.
Huh? That's a sensitivity. Yeah, which was 70 billion in 250. No, mine. No. That's the country. So 183. But just come back with a factual figure. Well,
yeah, in fact,
guess estimate is not required.
This is one of the key areas. If you
Yeah,
see, interest payments, it used to be around 4 to 4.5%. Maximum is 5%. Now it went up to around 8.8, close to 9%. Now it's coming down. I think it would come down in the future as well with the reduction of interest rates. But that absorbs a huge amount of resources to pay the interest rates.
While you give that also, get 1 rupee depreciation, how much it impacts on the debt stock that is there for India.
Massive
Those
amounts.
key factors when you got to run.
Massive amounts of uncontrolled borrowing has ended up these results, but we'll continue to engage with the input from the respective team members to get that under control, but we'll submit the data as early as possible.
Just one comment on that. In fact, this 100 billion, if you see the the rupee number, it's a little low, but since the rupee appreciated in terms of dollars, it increased. In fact, it was not 100 billion. It should be lower than that.
That's why I want the dollar, 1 rupee depreciation and 1% interest also. So that would help.
Yes. So on the primary balance, we have a target of 2.3, and this year we had a 5.3. Was it? No, negative. How much was planned? This in the original IMF program. Sorry.
0.8% of GDP.
Yeah, but now we have
Plus.
a positive.
Yeah.
So my question is now for inflation, we take as a target loss, and we find corrective actions.
Yeah.
Now these indicators, do we consider as target loss because it's good?
For example, the primary balance target. I think it's not the target miss. It's a big improvement.
That's what
So
I'm
it's-
again saying. The inflation is also lower inflation.
Yeah.
We take it as a target miss.
Hmm.
Now fiscal balance, we are doing very well compared to, and it's not considered target loss.
Yeah.
The Honourable Member, the reason is because this is mandated by Parliament. The Central Bank Act has a clause.
No, what I'm trying to look at substance over form here, because now we have loaded people with VAT, right? Many industries are dying. And if the fiscal balance is doing good, can't we think differently?
So you, Honourable Member, Minister, you know,
Let me
ball
add
is in your
something
court.
also. Let me add something to add to as well. So when you say the target miss when it comes to inflation, because it has to be from the for the benefit of honourable members, the inflation has to be maintained at a particular level to achieve the level of development that we are looking at as a country. So that is why if it goes seriously above those thresholds or below those thresholds, central bank is supposed to provide the explanation to the parliament, and that is also mandated in the regulation. 2 consecutive misses it is considered. So going below the bottom line into negative territory is considered as a miss, because for the economy to be maintained in that healthy position, we are supposed to be within that bandwidth. Whereas when it comes to fiscal, there's a target given, and once it is we have exceeded that, there's a less than 1% that was given, whereas we have achieved much greater. So it is not considered as a miss, it is a achievement. A lot of changes that we'll be doing, a lot of effort the team, the respective ministries and departments and the central bank is putting. So I'm sure good results will come out, but with the input of everyone we can improve it further.
Yeah. Just to make one comment on that, some additional comments on that. Yes, in terms of primary balance, yes, we have overperformed. As he just mentioned, the performance of the capital expenditure is not that good. So that's where the issue is. If you take the total allocation, it's about 4% of GDP, which is about 1.2 trillion. Whereas the utilization is about maybe maximum would be 60%. Otherwise, this 40% would have spent. So this within the primary. So then we would not be seeing this, but going forward, the instruction that we have gotten from the government is that make sure that you spend the entire amount. For example, next budget it will be around close to about 1.3 trillion. So if you basically spend this entire amount, so then that will be affecting the primary balance as well. In that case, we have to be mindful about the meeting of 2.3%. So we have to have maintain a balance between these two.
Has an interest component?
No, interest component is different. This is the primary expenditure. This is primarily without interest payments. Even in the that is one of the key areas. In fact, I want to highlight here is that under the Public Financial Management, new Public Financial Management Act, there's a target about 13% of GDP primary expenditure. This is excluding interest payments. So we have to maintain all the other expenditures within 13%. We would be allocating some 4% of GDP for the capital expenditure, and the rest would be the all other recurrent expenditure excluding interest payments.
Yeah.
That's the new framework.
Has your recurrent expenditure gone up that you only have in 0.8%?
No, in fact, if you see the up to November numbers, as you just mentioned, if you take the entire amount, the increase is less than 10%, whereas your revenue has increased by around 35 something.
Has recurrent expenditure gone up?
It has a little bit increased, but interest payments has come down. That's where the saving is about 9% decline. Yeah, because now we see the benefit of decline market interest rates in the government
on the areas of the mismatch that is there, you're monitoring, you all are responsible now. Where has been the gap? She mentioned it was the electricity rate, etc. But I don't think that by itself is an issue. How is it that we have missed?
No, mismatch means the target moving below the target. That is what we, for the explanation. From the monetary policy point of view, the change in energy prices has nothing to do with the monetary policy. So that's a decision by the PCU Law Electricity Board. That decision, we don't take monetary policy decision based on electricity supply side factors. So the supply side factors can short-term increase or decrease inflation. That will gradually come back to normal level. If we see a excessive demand coming up, then obviously we have responsibility to tighten or loosen monetary policy depending on supply. That's why.
My question is, the mismatch in the inflation target is something which the central bank has to explain why you missed it.
So that's what the explanation. There are three reasons.
The electricity rate was one aspect.
And
you are disputing that. But I said was the mismatch in the inflation increase from your perspective.
Let me add to that because that was a question that I asked earlier. We said we'll answer during the question and answer. Is 5% the correct figure now, right? Should we have 5% inflation? That is up to 7%, Honorable Minister, right? Is that too high given the current context? And two, inflation has come down from 70, so you hit the brakes very hard.
Yeah.
Right, only now the monetary policy is easing, so I guess there is a transmission lag for the macroeconomy to absorb the change or the shock in the system. So I guess that's what you were saying. It will take some sort of a J-curve effect, and it will come back up only maybe in a couple of quarters. So the third question is monetary policy important? How much of how powerful is? Yeah, that's my 25% in the sense
of the total inflation.
Yeah.
Supply side is contributing about 65%, and monetary policy is 35%.
Yeah, depending on the for example, there's a sharp supply side shock like energy price sudden adjustment. That will have a large impact on the headline inflation. There's a gradual adjustment, the impact of that would be gradual over a period of time. What happened last 2 quarters, in March and July, sharp adjustment in electricity prices, which was not expected earlier, had the pushing down the inflation from expected 4 to 5% to 0%. That's what happened. So that's why if you look at the underlying inflation, which remained around 3 to 4%, very close to
a drop in prices or what?
Yeah, drop in electricity, energy and petroleum prices more than what was expected.
And that had a negative impact on inflation?
Inflation, yes. Because there's a weight on the energy and petroleum on the index is very large. So when you have
so shouldn't you be looking at core inflation?
Core inflation is, that's why core inflation is much more stable.
Yeah.
It's around 3 to 4% even now.
Yeah, why are you looking at headline inflation?
No,
for
because
the
there's a reason for communication and understanding. So there's no credibility, then people can argue. We are taking out all the important food items. Like usually underlying inflation takes out this kind of volatile energy or administrative prices and the short-term volatile food items.
Yeah.
So the problem with that is that there's no credibility inflation targeting where people can argue, okay, what you are targeting is something not that affecting the people on the ground.
But then the change in tariffs in electricity has nothing to do with monetary policy.
That's why in our communication we have to explain clearly this is a headline inflation is the overall target. That's the agreement with the government and the central bank under the new act is 5% headline. And at the same time, we are looking at underlying factors of underlying inflation.
Yeah, but Honorable Minister's point that 65-35, how do you explain?
No, that's not exact number. That's
I think let's go back, right? So if you take the 70% inflation we took hit, right? Most of the Sri Lankan consumer goods are imported. And it was actually a supply side shock because the exchange rate went 3 times and the supply chain broke. and the inflation went high, it was not a demand pull inflation.
No, it was, I think, I mean, to my, in our analysis, why inflation was going up that time and also currency was basically depreciating faster was mainly because of the previous huge monetary expansion. We are pumping a lot of money and expanding monetary base significantly. That's that we have impact on the with the timeline. That's what we have seen. Then we apply brake to have a
no. It was not a demand. It was not coming through the demand.
No,
it was actually coming through the supply.
If you look at the current cycle, but if you look at the monetary policy, impact of what we do today will have full impact on 18 months. So what happened in 2022, the high inflation was mainly result of 2021 huge monetary expansion. So that transmitted into exchange rate, into the demand, very high imports, and that led to reserve depletion and then high demand. So that's the control that we had to have a sharp adjustment in the exchange rate.
But if you take today Sri Lanka, if you take the decision of the prices, how much is impacted through supply side or how much is impacted to demand? Because your monetary bank report last year, there was a nice chart showing how much was impacted by supply side, how much was impacted by monetary side, and in that the paragraph it said central bank is not worried about the supply side and it's not within your control, right?
That changing from time to time. So if you could show that chart where the inflation breakdown, Sujay, why don't you show that? This is it. So if you look at the recent inflation, this energy price has a significant impact compared to anything else. And the other one is the pass through of the fast inflation. So if you look at, we have a breakdown of all the time what are factors affecting headline inflation of that breakdown. There are 6 factors. I think why don't you, Sujita, explain that all. We have all this information in our monetary policy analysis, where one is energy and other one is food, other one is credit, all these things, and the exchange rate pass through impact on the currency. And there are several other factors. So that is not a fixed every time 40-60%. You can be even energy price. Certain periods its impact is huge, certain periods is lower, depending on the shock. So that we can provide that analysis of for a period of time what has had done, what was the impact on the headline inflation, breakdown of each factor, both supply, transitory, inflation expectation also important factor, and also currency.
Sorry, Governor, I want you to answer that, and when she's presenting, in 2020 you showed this spiraling 70%
2022.
Inflation. Yeah, now that monetary policy was administered by central bank then.
Yes.
Right. So where have you alerted the government that there is a problem in heading?
So then,
obviously, I mean, when it comes to monetary and fiscal, you put it on the government. Central bank is held responsible for monetary. Yes. Where have you alerted the government that this was happening?
Let me intervene here.
No, certainly. I think we have a deputy governor, former deputy governor, in charge of this monetary policy at that time, and obviously I have to say, the all officials, monetary board is responsible for alerting
but you
the government.
Remain as officials.
Sir?
That you always still remain as officials, no? Now you're saying that then it was officials. Where was the impact that was told to the government? Something is going wrong. That is your responsibility.
I think, yeah, of course.
No, in fact, maybe I'm the only person in this room who is working still from the beginning up to now.
Yeah,
so I know A to C what happened. We have been, alerting the senior management that I think Dr. Harsha, Honorable Chairman is very well aware of this. And I myself submitted at least 6 board papers about this impending crisis. I have submitted all this to the Parliament committee.
Mr. Secretary, I'm not going to open this can of worms now. It's not.
No, but we want to know that.
Yeah, we
can of worms.
No,
we have gone into bankruptcy. Come back. People have
Honorable Member.
We like to know where it went wrong.
No, Honorable Member. Today is not the time because we are running short of time. Today we can open this at another time because we don't want to go there now. It is not the mandate of today's agenda, right? This is a long discussion and we can certainly do that. We'll take 2 hours to do that and I'm open to doing that. And the issue was monetary policy was politicized, and let's not go beyond that. And it was political decisions that got taken, official recommendations were ignored, and that I think is widely accepted as what happened. So let us hold it. I'm not dismissing the honorable member's point. I'm only postponing the discussion on that from today because for the lack of
taking
time.
the point that to be given in detail into the future. I
Right,
know
so make a note of that.
Finance has mentioned at that particular point, but why did it not get into public domain? Right? We must ensure that also is a regular feature that will come out.
Yeah, so we will get, Mr.
the
Secretary, we are not going to get into that now, right? Because time is of essence, we have to start and finish on time. We can get the Supreme Court decision on that.
1 minute. No, in fact, all these, reports that we submitted were taken up at the Supreme Court when the decision determination was given. Maybe I would invite, honorable members to go through that determination, the way that we as officials, highlighted all these risks and, gave all the warnings which were, not heeded, not recognized. So as government mentioned, we were just official, we were, proposing all these things. And even a number of times I asked them to, go to the IMF. My understanding, only the last chance we had somewhere in September 2021. Thereafter, everything, we can discuss as honorable member mentioned, the chairman mentioned. But the thing I want to highlight here is that we gave enough early warnings, which were not heeded. I will stop here.
Yeah, right.
So you get that 6 reports that you said. Just get that sent along. I know that.
Sorry, just to add, I think one comment I want to make is already in the public domain in terms of Supreme Court hearing is a public document available, and also there's a committee by the Parliament to investigate the economic crisis even after the Supreme Court decision. There, ST, myself, and everyone came and tabled all the information in front of the Parliament.
Yeah, let me just close with this. There were 2 members of the Monetary Board who were not implicated in this matter. That is Mr. Sanjeev Jayawardena and Mrs. Rani Jayamaha. And the other members were implicated. So in their defense, I think they submitted days of evidence which is contained in the documentation. And that clearly shows, Honorable Member, how the Monetary Board was divided.
No need of explain. Send the report.
The report is out. Report is out. Report is tabled in Parliament. Somebody can give the honourable member a copy of the report, please. And we can allocate a day if the members want. We can allocate a day. For 2 hours we can discuss this and to understand where we went wrong.
Honorable Chairman, I suppose the public has digested the reports and findings. That's why 2/3 is given to a new government to take the way forward. So with the input of all these respectable members, I suppose we'll...
Honorable Minister, I told you at the beginning, this is no politics.
For sure.
So I request you to refrain from making political comments.
It's not about political comments, Honorable Chairman, once again. It is about the member mentioned that it's not in the public domain. So it is in the public domain. To the extent it was taken up at courts, this was discussed at length, and responsible parties were identified and people have made decisions also, just to address that point.
Okay. Next, Dr. Kapila, we were somewhere. We were on the revenue, we were on the fiscal side. So referring, to this matter, Secretary, so we need to get a better understanding as to the movement of inflation, both headline and core. And, if it is a communication matter, then it is up to you to communicate to the general public the difference between core and headline. Right, but as long as monetary policy is concerned, you can't be focused on headline. You have to be focused on core.
I think for that, I certainly appreciate what you comment. So basically, current agreement with the Minister of Finance and Central Bank is to target headline inflation 5%. I think I see your point. Whether 5% is the right target. I think this was based on several research at that time we did and presented even to the Parliament and this committee also why 5% was appropriate that time. Obviously, 3-year agreement has been signed. This is open to the review. It's up to the government under the mandate to give us the target is whether it is the underlying core inflation or headline inflation, whether 5%, 4% or 8%, is certainly we have the authority. So we will certainly provide all the analytical work why we thought at that time 5% was appropriate, based on a lot of other research, similar level of economic development, and obviously I think going forward, in my personal view, 4% would be like in India now, 4% is the target.
Yeah.
And obviously we have to think about 4% means we have to maintain a tighter monetary conditions.
Honorable
That's a
Deputy
balance
Minister,
between those two.
sorry, I think it's a good opening for everyone, and also look at how inflation is, what is inflation, how much is cost push, how much is demand driven, what is the, and also I think it's a good time because it's a new government, whether the 5% is the right figure.
So we said DSA should be
Let's not go there.
The assumptions. The assumptions are the ones that are pulling us back now, right?
This gives us the opportunity to revisit some of these decisions.
I think we can have a constructive discussion. We are very happy to have that discussion. I think
let's do that.
The 5% or 4%, I think is important discussion. I think last point I have to make is that inflation is the worst enemy of any economy, and worst affected are most poor and vulnerable. That's where governments are focusing on as much as low inflation, low the better. But what is the low inflation appropriate for a country like us, whether 5%, 4% or 2%, is something that we can work on and determine, and then we can deliver. It's our mandate to deliver that once it is.
I wonder what is the rates in India and Bangladesh and things like that?
India inflation targeting regime, they started with 4%, plus and minus like us, 2 plus 2 minus the band. And countries like Thailand is 2%, Philippines 4%, then Bangladesh is, inflation is out of control now. There's no inflation targeting regime there. Countries with inflation targeting at our level of, there are countries like our level of is right around 5%, some countries 6%, some countries 4%, in that range mainly. Not 2%, 3% are much more advanced countries, is usually 2 to 3%.
So I think let's look at this because we are talking about annual or a quarterly increase in price, right? What happened in Sri Lanka was the price went up 300%, most of the things, but it never came down. If you take the salary inflation, we can look at central bank also publish the income of people, and that has a huge still gap. So obviously the country has to go through a supply side change to bring things into perspective. So I think we need to really look at this inflation, the inflation targeting and the outcome, what we are going to achieve. So if we even go with 5%, and if the the salary inflations are at a different level, people will still suffer.
Yeah, so let's keep that for a longer discussion, make a note of that. I think it's good to go into this to understand, because my personal view is monetary policy cannot create growth, right? Growth can be created on the supply side, and that you need to do reforms. So let us not mix up the two. One is to stabilize, one is to grow. So stabilization cannot be used as a tool for growth.
Yeah, Honorable Chairman, there will be opportunity, and we have already written to the Minister of Finance, submit the report to the Parliament on deflation.
Yeah.
So there we need to have a discussion and come and explain to the Parliament. That will be an opportunity, whether it's your committee or any other committee, that's up to the Parliament. So we can come and have that discussion in much more detail.
We gave a directive last Parliament that it should come through this committee. That directive still stands. So unless the Speaker wants to change it, so what we can do is you can come through this committee, but we can invite other members of Parliament to participate. So we can have in a bigger room if you so wish to. But it can go through, because that directive has been given last, so there is no question about it. It has to come through this committee.
But Chairman,
yes,
we have two problems in 25 years. You're going to get 5 trillion revenue. And these won't come with this policy adjustment. It has to be taken by the government. So in order to get the growth figures and to live up to 28, we'll have to take those decisions fairly quick. That's the reason I'm pushing for an answer, because for 3 years, we'll fly. And so we'll have to ensure that that is being looked at and these policies are addressed immediately.
Well, remember the situation is well understood. That's why inaction and wrong action in successive many decades, country has come to this point, And we are very serious and we have understood the issue. We are working with the officials and the contribution from all the respective government agencies. One is the stabilization side of it, other one is the growth side of it. There are multiple other angles as well. But we have understood the situation. That's why previously it was mentioned also. Country has continuously allocated for several years so much for capital investment as the public investment. Even though budget has made provision, actually the actual implementation was very less. As a result, there's no dividends coming into the economy in the subsequent years. So it's why it's very important that we not only allocate in the budget for the public investment, we actually get it done also on the areas that matters to the economy. So these details have been identified. Thank you for highlighting. And we'll be paying more attention to
the
ensure
next
those
review,
are implemented
next
as
review
well.
would be 6 months after. And by that time, you'll be halfway into the 25. And I know the revenues are a tough one. It can't only come on anti-inflationary. It has to come from, the supply side.
I would, Honorable Minister, once again, whether it is right or wrong, I would say decisions made by previous governments would be more appropriate. I just want to make that point because I just don't want to make this political, that's all. Can we finish the discussion, Dr. Kapila?
Yes, I think that's the nutshell for the 11 months. So
the state, I would like you to look at the profitability of the state-owned enterprises as the last one at least, so that we can.
And so we have summarized the major 10 key state-owned enterprises profitability. So you can see that as end of October, so all 10 agencies have made profits. So
this was just made available to me, this presentation. Do we have this presentation? You share in the WhatsApp group. Ideally, we should have these presentations tabled prior to you making the presentation so that the members can have this. I just got a copy of this. Next time, please make sure that all members have a physical copy.
Approve this.
Yeah, that's what I want
and
to do.
And then we'll take it because there's no point meaningfully just running in 5 minutes.
Yeah.
So because the questions that are will be helpful to make policy.
Yeah. So that is what, because it's urgent business for tomorrow's debate. That is why we met today to do this. So in principle, that's why I said let us.
So in principle, approve and then we'll take it. We'll take this to another day.
Yeah. So just summarize this so that we can finish.
Yeah. So.
Broadly, I think that reflects the fiscal sector performance, particularly expected outcome. In fact, two key things that I want to highlight here with the implementation of the new Central Bank of Sri Lanka Act in mid-September 2023, Treasury is not getting any money from the central bank. So money printing, technically money printing has now stopped. We are in the process of repaying some of the debt that we got from the central bank. That's one of the key developments. And then in order to basically face the market development, particularly in the domestic treasury bills and bond market, we were able to come up with a cash buffer which we would be using if there's any shortfall in any of the auctions. That mechanism has worked really well up to now, and we are hopeful that in going forward as well, you would be able to maintain that stability, particularly in the domestic credit market.
700 billion of state-owned enterprises profits being made from losses previously. So it's creditable. Look at the wholesome picture, which will be helpful for you all.
Then the minutes of 24th January 2024 clearly indicates that all of us agreed that under the new act, the reports will be presented through the Committee on Public Finance. So let's stick to that. It's officially stated here. So that next item in the agenda, then what we'll do, members, with your concurrence, is we will approve this so that it can go into the debate tomorrow. But approve for debate, because this is, like I said, it's so far back, October. Now we are already in January. So what we will do is a fiscal position report, because the budget is coming up in another few days. You all are presenting the first reading tomorrow or day after, something like that. No, 9th. So then we will have an opportunity to use that to have a more updated discussion here. Is that okay? That's fine. Okay.
When we say approve, what does that mean? Like, do we say we are happy with this report, or do we say we have seen it, or do we have seen it?
No, we present a report in the morning to the speaker. In that we say that we have approved this is nothing to approve, because this is, you're not asking for a tax increase or a HS code adjustment or anything like that. So
isn't it to say we have seen it and we have looked at we have had a discussion?
Yeah, we had a
cursory glance.
The terminology.
No. Honorable member, that tradition has always been that we approve something or not approve something. So there is no midway saying we have looked at it. It doesn't mean anything. So if we have problems with this, we can say, look, we are not in agreement and we don't approve it. But I don't see any reason why we should do that. Right? We have questions, and we can continue to discuss matters contained herein. But I don't want to, upset any government business tomorrow by saying, look, we are not willing to approve this.
Honorable Chairman, can I say basically this is providing information to the Parliament by Minister of Finance. I think this Honorable Committee can accept or not accept the report submitted by the Minister of Finance on the past performance.
That's right.
So if you don't accept that, if you think those are not proper figures correct, then obviously you can mention. Otherwise,
I agree.
Probably,
That's a better term.
Yeah, I agree. We can do that.
And also, I think it would be appropriate to give some of the views of the committee as well going forward, particularly to improve the position. Yeah.
Yes. Thank you. So then it is accepted. This report has been accepted by the committee. Is that okay?
Treasury officials have to be stayed after this meeting to get the other.
Yeah, that's right. Yes. Yes, sure. We can meet after the yeah. Next is anything else that anything else? We have one other 5-minute job that we need to do. The treasury officials will have to stay at the National Audit Office work plan. Any other matters? I just want to raise one matter, Mr. Governor. It is today's paper, all national newspapers has this advertisement of valuable they have taken in every newspaper. Yesterday or the day before, I saw a member of the Monetary Board having been appointed as a director of this company, which seemed to be mainly focusing on, among other things, finance. So I was just wondering, I was just curious, how ethical is it for a sitting member of the Monetary Board to serve as a director of a company that deals a lot with banks and finance companies? It's just a question that I want to pose to you, Mr. Governor.
Yeah, we will certainly. I also noticed that. I think based on current code of conduct for monetary policy, governing board and monetary policy members they are not allowed to serve on any entity that comes under our regulation. So this is a group company. Like if you look at John Keel's Holdings, it's a group company under which there is a bank also. So there's no prohibition for members to be a member of that group structure.
That is it ethical?
That's basically a question. So I think one of the issue here from the members' side, right now there's no prohibition. So it's a question of ethical. I think we expect members to be professional, and if there's any conflict of interest arising out of this even group meetings, they should be refrained from engaging in any of these matters if that comes even at that level. That is the code of conduct we expect from the members. I hope that members, as professional members, would follow that ethical practice. I think I have seen that has happened even when you have members who are serving at the group level. Even when it comes to a subsidiary of that group discussion at the board level, they refrain from participating in that discussion. that happens in our side. I hope that will happen on the other side. That is a code of conduct. So we have members of I myself, the chairperson. Then we have Mr. Nihal Fonseca, Mr. Manil Fernando, Mr. Rajiv Amarsurya, Manil Fernando, Manil Jayasinghe, Dr. Ravi Ratnayaka, and Mr. Vish Govindasamy. Those are the appointed members of the governing board.
This is with respect to Mr. Manil Jayasinghe, who's just been appointed as a member of the board. I don't know. I mean, this committee can have its view.
I would also add something, Chairman, which is very correct. There are rules, but there are ethics also that we need to look into. Similarly, we have raised it earlier also. There are restrictions applicable to banks in terms of age, but may not be looked at by the monetary board members because it is not a requirement that is applicable. So once again, we have to look at from that ethical angle as well to see how right is this. Being a subsidiary of a group company, obviously there is influence. At the end of the day, it can go either way. So ethics is an important element, and we fully support that discussion. Thank you, Chairman.
And one other thing, the Finance Secretary is out of the Monetary Board for the first time. How is it reflecting from a Finance Secretary perspective and the Governor of the Central Bank? You find the government policy, how does it come to you?
No, that's the whole idea of central bank independence is to have an independent monetary policy and financial system stability. So that's the whole idea why this was brought in. I think we had a long discussion. I think we see that new structure as all over the world that is best practice is working well. I think from my point of view, I see that's very effective and very good process, and that's working well as a independent entity responsible for implementing monetary policy as well as the financial system stability.
Right. Then,
and also coordination council. Coordination as a strong coordination council within that.
Yeah. Then, ladies and gentlemen, thank you very much for your participation. The Treasury officials can stay, and the rest can take their leave.